In today's weekly forecasting series, we're going to be breaking down all of the major Forex pairs that are looking good at the minute to trade. I'm going to be breaking down my analysis just to sort of give you guys a bit of a better idea on how I build a weekly bias. So we'll be going through previous price action, up and coming price action that I'm predicting, some of the fundamentals and some of the technical analysis that goes into building a bias for the week. So jumping straight into the dollar index on the weekly chart. As we can see, we've been pointing out over the past couple of weeks that we've been dropping pretty heavily on this. I mean, the start of the year is around here and we've literally sold off all year on the dollar. And now we're sort of seeing some consolidation within the price action. But if we were looking at this from a premium and discount range, we spoke a bit last week about how whenever you have got whenever you're analysing the Forex markets, you know, it's not just a straight drop like stocks might be with businesses or straight just bull runs. There's always sort of a bit of equilibrium within the market just because that is exactly what people are trading. It's currencies. They have to go back and forth with the valuations to sort of try and lower the valuation, then bring it back up just to sort of make sure they are competitive within export trade. So looking at the weekly chart, we can see that we did have a run on sell side liquidity, and then we've had a bit of a rejection block formed, and then we're starting to make our way up. So if I drop down to a daily chart, we will actually have a bit of a better look at the market structure from a technical point of view. So if I just put my drawings on here, I've marked out. This is nothing new. We've been marking this out for the past couple of weeks, but it might help train your eyes with seeing this sort of thing. If this was your 15-minute chart, you know, where would you favour this direction to be? We all know from the ICT models, especially I went through this a couple of weeks ago on my channel. We had a run on sell side liquidity, and then we displaced up, failure swings. We've been making fair value gaps, volume imbalances higher, which is all being respected as of current, which does tip its hand towards more bullish price action. Now, we did mark out this initial consolidation right here, which has been hit. That was the target that's been met. We did have a market structure shift here where we displaced convincingly through this swing high, external range, come back to internal range, the fair value gap, and then go again. Same thing, broke external range here, come back down, tapped the fair value gap, and then we are now making our way higher. So no matter what you guys think about fundamentals, I'll just give you a bit of a breakdown of how I look at things. Whenever we are respecting bullish PD arrays, it's very hard to make a case for reversal. And oftentimes people try and catch reversals as they're going to happen. But the best way I've found when looking at trading consistently and following a model is you have to sort of squeeze everything out you can. So with this, the price action has been very bullish and we've respected bullish PD arrays. And as of current, we've respected this. There is no signs yet of reversals from a technical point of view. So I'm just marking out some longer term targets here. This is the short term and this would be the more longer term. But as we always do with price, we take it one step at a time. So this would be my up and coming target. And if we sweep this high and reject heavily, that's where I would wait to see if we can sort of go again. But as of now, we've come back down. On the Friday, we did come back into this fair value gap here and we have tagged that and we've closed a little bit high. It's still looking at the closes of the candles, you can see whenever you get a candle like this is a convincing sort of telltale sign from the market that we are looking to respect that bullish PD array and the next up and coming candles will go higher. So just to do a bit of teaching on this, if you have a candle like this and I'm now seeing a very bullish reaction with positive intent to close higher, then I don't expect the next daily candle to take this low, which means anywhere below midnight's opening price is a good position to sort of get into a trade and look to go long. So if we go across to the EURUSD, because this is the trade I've picked to trade, we were pointing out last week this OTE region. Now, Euro has shown some signs of strength, which isn't always good. If we look at Euro GBP, we can see that the Euro GBP has been trading higher. And if Euro GBP is trading higher and we want the dollar to trade higher, then Euro GBP isn't going to be the most favourable moves. However, the reason why I picked this is because if you actually have a look at when we entered on Euro GBP, it was pretty consolidated. And I did speak on this a few weeks ago. Whenever you do see that something is more consolidated, then the euro is actually higher correlated to the DXY, which means I always choose the euro to trade or other than GBPUSD. So GBPUSD did show intent of weakness, which was good for anyone in this position, but at the time, it's all right in hindsight saying all of this, but at the time, Euro USD is the more correlated pair with the dollar, inversely correlated, sorry. So we took that position. Now, we took this at OTE, optimal trade entry from this region, stop at the 1. Entry was pretty low because we did actually capture this OTE, which I have covered previously in a video. There's a trade breakdown on my channel if you guys want to see why I sort of spotted this run on sell side, this displacement lower, and then took this swing from the 7.5 level. And now we're just back in a position. Again, rinse and repeat the same model, OTE from this region here, 62% entry, and now we're just sort of closing around that level. Now, if we do look at the DXY on a weekly chart, we can see that it's been pretty consolidated, although the daily chart shows good price action. If we zoom out, we can see there's not been too much expansion within this area, which for me, after being in this trade, was a reason to sort of shave a little bit of risk off. So this was the original position. This is now the position with the stops trailed. We can just see that we've sort of cut back on that risk a little bit. So I'm happy. The trade is pretty much break even. Very little risk, very good upside, which is always a good position to be in when looking at the positioning. We've got a fair value gap here that if we can respect, that would be good. We've got an order block up here, or what is forming. So we're just looking to get into we're just waiting basically. That's the thing with swing trading. I can manage my stop effectively. I can always wait and see. You know, this is sort of the reason why I made a switch from intraday, because it's needlessly quicker and you have to react faster and you make more emotional decisions for my style. I always found that swing trading was a much calmer way of trading, but it doesn't always work for some people. Some people prefer intraday trading because they're in and out very fast and they can sort of manage the position within the day and be done. And some people can't really sleep at night with open positions. However, I've found it to be a much more effective way of managing my trades. So that's the current position that I am eyeing up. I'm expecting lower dollar. And so some of the fundamentals behind that, we did have CPI come out last week, and that come out year on year at 3%. And that was actually lower than the 3.1 forecast. So you'd say that inflation's cooling off, which would be maybe against this trade. However, what I would say is that the Federal Reserve's target of 2%, we are still above that, which means inflation is still hot in the grand scheme of things, even though it's lower than forecast slightly. So I'd still say that this is a reason for a bullish dollar. Now, again, I've covered market structure for the dollar index as well, not just from a technical point of view, is pointing bullish. So I don't want to disrespect that, try and catch reversals, as in the long run, it's not good to be contrary to the market structure that's prevailing in front of you. I know my technicals, I know where I'm looking at key levels, and I need to follow that effectively in order to implement an edge within the market. And also, if we go back to the dollar index, I've covered this a little bit today, but we've had a huge drop all year, you know, and we are looking at a rate cut that's coming. We've already seen rate cuts from a lot of the other central banks. However, I think this is priced in already if we have a 25 basis point cut, because we were following it right through here. A lot of my other weekly breakdowns were covering the fact that we were monitoring the rate cut being priced in, and that's exactly what come. We had lower prices, but then we've sort of seen some displacement higher and some reaction from the market. And even when there has been talks around rate cuts, there hasn't been much movement lower in the markets, which does actually tip its hand to the fact that it's already priced in, and investors are looking to now sort of go long and buy at a higher price, because it's not about what's going to happen necessarily, it's about what people think is going to happen. And if everyone has already factored in the fact that a rate cut is likely to come, then there isn't going to be much more expansion lower, because that will already be priced in from investors. Just to cover some other things as well, we did have the S&P 500 make all-time highs again. This was after the China tariff scare that come out on the Friday 2 weeks ago. However, that's completely recovered. We did mention in the commentary that it's always important to not look at the noise, and it's always important to look at things from a holistic perspective long term, and that is exactly what's played out. Everyone was saying stocks are crashing, we're going to go lower, but actually it just recovered within the day. It was just a bit of a bad day for people that traded cryptocurrencies because they saw huge volatility within the market. Everything else, all the other pairs, just to cover, obviously I've covered this, I can get rid of this, but this is now looking pretty consolidated. I wouldn't be too interested in any other pairs. I've had a quick scan, but nothing really looks too brilliant. I mean, USD JPY does look like it's going to take this target that we marked out, this fair value gap. We come again, bullish intent close, previous day's low didn't go, and then we just traded higher. So I'd expect this target to be met at some point. But other than that, guys, that pretty much covers everything I wanted to cover today. Market structure on the dollar is looking towards higher prices from my perspective. Euro inversely correlated. That's the position I'm in. I've managed risk effectively where I've shaved because of the consolidative price action at the end of the year. CPI has come out lower than forecast, but still is hot, so it still doesn't show any signs of reversal. And that's pretty much everything. So thank you very much for watching your weekly insight into the Forex markets from my perspective. If you did find the video useful, please like and subscribe. It's really helpful. It lets me get these out to more people. And if you guys have any other beliefs or any other factors that you feel like I haven't put in today's video, please be sure to leave a comment and we can have a discussion over it there. So thank you very much and have a safe week's trading.